Thank you for joining us at xm.com for today's daily market comment by Haralambos Pisuros. I'm Cristina Marujos. The dollar traded higher against all but one of the other major currencies yesterday, although it is trading mixed today. The only currency against which the greenback lost ground was the British pound. Following a streak of upbeat economic data from the United States, investors have dramatically revised up their expectations on the path U.S. interest rates are likely to follow. And yesterday, the preliminary S&P Global PMIs added extra credence to that view. Both the manufacturing and services indices improved by more than expected, lifting the composite index into expansionary zone. Market participants are now expecting interest rates to peak at around 5.35% in July and price in 20 basis points worth of rate cuts by the end of the year. Traders, therefore, may pay extra attention to the minutes of the last Fed gathering scheduled to be released later today, as should more policymakers express preference about higher rates that could increase the chances for the median projection for 2023 to be revised up in March. This could add extra fuel to the dollar's engines, but calling for a full-scale bullish reversal is still premature. Turning to the Eurozone, Euro area indices yesterday were also largely better than expected, with the composite PMI rising to 52.3 and adding to hopes that the Eurozone may avoid a previously feared recession. Combined with underlying inflation not showing any signs of slowing, this gives the green light to the European Central Bank for continuing raising interest rates aggressively. According to money markets, investors have now raised bets for a triple hike at the next ECB meeting. Should next week's inflation data show that underlying inflation remained elevated in February, ECB hike bets are likely to increase, which will complicate things for euro-dollar traders. Up until yesterday, euro-pound seemed the better pair for exploiting any euro strength, but the UK PMIs also surprised to the upside, jumping to 53 and returning to growth territory for the first time since July. The pound was the best performing currency due to that, but it may not be out of the woods yet, as the Bank of England is still expected to proceed much more carefully than the ECB and Fed with future rate hikes. Increasing expectations of more aggressive tightening hurt equities yesterday, with all three of Wall Street's main indices falling by more than 2% each. The more rate-sensitive Nasdaq tumbled 2.5%. The risk-linked currencies Aussie, Kiwi, and Loonie were also down due to the deteriorating risk appetite. The Kiwi managed to gain some ground today after the Reserve Bank of New Zealand hiked rates by 50 basis points and noted that further tightening is needed due to core inflation remaining too high. However, with risk sentiment continuing to deteriorate during the Asian session today, the currency was quick to give back a large portion of its RBNZ-related gains. This was today's daily market comment. Thank you for watching at xm.com.